2023 has literally been the year of IPOs essentially, with 6 new initial public offerings this week, 11 IPOs in December alone, raising over 8,000 crore rupees. Now NDTV has been tracking the market momentum as well as the flurry of IPOs hitting Dalal Street very closely. In the last week of 2023 and IPO still shining all the way, we decided to decode the IPO landscape altogether. We're joined by economist Vijay Sardana, Sanchita Mukherjee, Managing Partner at Talk the Walk, and Nasir Salim, Managing Partner, Flexi Capital. Thank you very much for joining us. Vijay Sardana, first to you. Is this influx of IPOs just due to a large consumer base, as many say, and many believe strongly, or is it now about better and bigger opportunities?
Good morning, good afternoon to all of you. See, India is one of the biggest consumer market today in the world. And the way economy is growing, it is giving confidence to all the investors, especially the retail investors. And at the same time, the stable political environment in the country also adds to that optimism. And that is why if you see that all the companies, those who were earlier sitting on the sidelines before raising the capital, now rushing into the capital market to raise the capital for their expansion and other activities. So all these factors which are responsible for this rush for IPOs. And at the same time, we have seen that there was a lull because of COVID. Now markets are booming. You have seen all the prices are going up. This also gives an opportunity for the investors to encash on the inflationary trend in the retail market. So all these factors, if you put together, is a right time for IPO rush. And that is what we are witnessing in the market today.
All right, Sanchita, do you agree or do you believe this is, about bigger and better opportunities now as well?
These are bigger and better opportunities.
And thank you so much for having me over here.
When there is a flood of everything, whole lot of so-called substandard IPOs can also filter into the game.
Right, right. This was for Sanchita actually, sorry.
Environment is positive. Retailer investor has to be careful before they pick up. Always look into fundamentals before they look into any review reports.
All right. You say it's fundamentals and they must be looked at. Sanchita, what do you believe? Is it now, of course, due to a large consumer base, as many strongly feel, or is it about bigger and better opportunities as well?
It's a bit of everything. Thank you, Sakshi. The way I would look into this with a lot of granularity is, yes, a lot of structural reforms have happened in the Indian markets. We have progressed from being 12th largest economy to being the 5th largest economy in the world. There are a lot of opportunities. Consumption story is very much intact in India. So all of those factors are playing out. Having said that, it's a common norm that when markets are also doing well, the capital markets, the equity markets, there are a flurry of IPOs which do happen, and that is the nature of the game. Having said that, what retail investors need to be really cognizant about are 3 points when you're evaluating IPOs. You cut out all this noise and all of these excitement and the buzz in the market. What one really needs to understand is one, first and foremost, needs to look at the ownership or growth prospects of the company, right? If the company has an ownership and the owners, promoters are not selling out lock, stock and barrel, if the company has a traditional model and has very good fundamentals, if the peer valuations are really great, the financials are good, you've assigned yourself to the prospectus and read it, and the money is being raised for growth expansion purposes, then it's a correct way to go about it. However, if the ownership is not just promoter holding, say for example, the ownership can also be a lot of private investors, the ownership can be private equity money, can be venture capital money, in which all of these investors are looking to sell out at higher multiples. So in which case, what exactly is the valuation left for the retail investors? One needs to question that, right? All IPOs do not come out with a big bang and then stay that ways forever. So if you're looking at short-term trading and speculative activity, that is definitely a no-no. Leveraging yourself for IPOs are definitely a no-no.
All right.
And one has to look at the ownership, the valuation, the objective. Primarily, what these monies are being used for. Are they being used for to pay off debt? For example, a lot of IPOs come in which the company is using this money to pay off their own debt. Is that growth accretive? one needs to understand that better.
All right. Nasir Salim, your thoughts. Remember, the top 5 IPOs based on highest returns on listing day are, across sectors really. It's not just one sector, it's across sectors. So your thoughts on that?
Good afternoon, Sakshi. Thank you so much for having me over again on your show. I think, 2-3 key things, Sakshi. Number one, I think, this entire ecosystem, if I talk about the IPO broadly, we have major structural tailwinds in place, for the IPO market. And I agree with my fellow panelists, but the thing is that, we've got GST, RERA, Aadhaar, some great stable and pro-business government reforms that have been announced. There's a lot of increased confidence to invest in India at the moment. We see this globally also. There's pent-up capital demand, Sakshi. Capital for growth. There's private equity exits that may happen that Sanchita just spoke about in terms of multiples and higher valuations. There could be subsidiary listings by conglomerates to unlock value. PSU is a very important sector, and we're looking at huge disinvestments being done over the last few quarters and expected over the next few quarters. Robust capital, right? There is the EPFO expected to continue investing in equities, which is again a big game changer. We've seen markets going up, making it more favorable for the IPO market. And strong GDP growth expected. Broadly, if you pick up the papers today, all across the newspapers, there is talk about resilient economy seen expanding at 6.7% all the way into financial year 2024. And so India is amongst the fastest growing economies globally as well, generating high interest from FIIs and DIIs to invest in India. So I think, the broad perspective is, yes, you've seen major listing gains coming in, but there are also stories, between 2020 in the first half, where we saw a lot of companies not making those gains. You spoke about, your show. You're talking about 4 or 5 companies that I can see on my channel, on my ticker, to say that those are upwards of 90% on listing gains. But that may not be the only reason for you to invest in IPO. I think, you have to have a clear understanding of your risk adjusted return, your investor profile. And, and I agree with my fellow panelists to say that, look, you bite as much as you can chew. Don't just go all in thinking because they've had some great stories in 2023 in terms of the IPO listing gains that we should be putting in all our money. There are great factors. Equity, as a return can be very volatile, and especially in the IPO market. So again, understand what you're getting into is the broad word of caution as far as investing in IPOs.
Right. I think we've established, like you all mentioned, the need for caution, various factors coming into play. Sanchita, the last word really to you. 2024, is that going to take the IPO rush further, you think, your expectations and your advice to investors really?
Yes, I quite agree with you. I think the stability is now in the economy is very much apparent to the rest of the world. And the economics of our nation is reflective on the equity markets as well. So markets expected to be buoyant. However, the equity markets will also remain very volatile and can remain range bound because there are a lot of other global factors in play over here, right? Which we're all aware of, their geopolitical tensions, oil prices, all of that. We are very much cognizant. It's also an election year. However, having said that, I think the reforms are long-term. The fundamentals of the economy are strong. And more importantly, the Indian economy is very diversified. The equity market is extremely diversified. You name it, from real estate to IT to specialty chemicals, realty, consumer durables, FMCG, new age technology companies, fintechs, edtechs. There's so much to offer on the table. But one has to be cautious in terms of one has to understand what Nasir rightly said, what's one's own risk appetite and how it fits into your long-term objective. One should consult with investment experts, understand the prospectus, understand the ownership, the objective of the IPO, where the money is going and for what purpose, the valuation game, how much is being left on the table for the retail investors. All of these one needs to understand in greater detail before one gets excited about an IPO.